Good morning, everybody. It's Javier, and I'm super excited to be with you here today to share with you news and also training that's critical to your lasting success. It's not okay to just make money every once in a while, but we want this to be a lifestyle for you here at FFS, and we're going to be able to show you how to do that. And compliance plays a tremendous issue as it relates to what we do. And so you don't want to be the one that triggers a audit or triggers a lawsuit or any of that stuff. And so you want to make sure you do things in a compliant fashion. And so today we're going to talk about a couple of things, and I'm going to start by pulling up a URL before I show it to you on the actual screen. And I'm going to share this with you. Let me go ahead and share this with you 1 second so that you can go ahead and see this for yourself. And I'm not going to spend too much time on it because we have a lot of important information to pass on to you right now. So let me just go ahead and start with what I'm going to share with you at this time. So let me just see if this goes through. You should be able to see that, I hope. And I actually have my handy dandy iPad. So let's just make sure that we have this. You can, I don't have to be asking you if you're able to see what I see and all that other good stuff. I'm going to talk to you about the Lsw lawsuit, especially for those here in California. We had two issues this past week, I should say, in which it popped up. And on both occasions, I told him that I wasn't going to give him the information simply because of the fact that, let's see, for the video. All right, there we go. All right, so let me go ahead and start this. Although we're getting a lot of people just coming in late. I don't know if it's awesome to what it is, but I'm so sorry. We're going to just do this one more time so I can share this with you right now. Good morning, everybody. It's Javier. I want to thank you for being here today for this very important training. We're going to share some news with you as it relates to things that affect your business and to show you how to do your business and run your business in a compliant fashion to keep yourself out of hot water with either the company, regulators, and so on. And most importantly, to do the right thing for our clients as well. So let me go ahead and just start with a couple of things. I'm going to share in the actual, and I'm going to share this via the chat. So if you look at your chat, I'm going to send you an actual link. And the link that I'm going to share with you right now is the same link I'm going to go ahead and put up on the screen here momentarily. And you should be able to see this. There you go. And the link that I sent you is what you see or should see on my screen right here. And this refers to the Walker versus Lsw lawsuit. It is finally settled. It's been going on for many, many years, causing a lot of confusion. But I just want to give you a quick overview because you can read this and you should read this for yourself. I'm not going to sit here and read it to you, but I encourage you to make sure that you do your part to become familiar with it. And it revolves around, like most things, illustrations. I'll be the very first to tell you that I know a good portion of life agents out there have no damn clue what the hell they're doing when they're trying to explain illustration the way it should be explained. And in most cases, they're out of the business, out of the industry at that, leaving everybody that's still behind to hold the bag. And so this does affect a lot of our clients. It affects us, for us of us that have an actual policy. I jumped on the bandwagon now that it's settled as a client, because I do have this policy that they are speaking about here as well. It is finally settled. It has been going on for a very, very long time. The website that I shared with you right now also has some timelines and statuses. And as you can see on the right-hand side, it shows you what the last thing that has gone on with this lawsuit has taken place. And it starts with the most recent one from June 7th that it has received finally the final approval as well. And it goes back many, many years, been dragging through the courts. And in a nutshell, just so you know, with the settlement, like with most settlements, Lsw is not admitting any fault of anything. It was never about Lsw, quote, doing something wrong per se, but more of the illustrations. And my recommendation is to start with the FAQs and make sure you hold on to this domain to give it to clients that might bring it up. We've had several teachers bring it up this past week because teachers are back in classrooms for the most part, and they're entitled to know what the hell's going on with it. And the reason that I bring this up is not to be negative, because I don't think it's a negative, it's the reality. It's because there's a lot of bad information out there about this lawsuit, that it's about the bogus IULs, that the company is going out of business. I mean, it's amazing what, by the time the old telephone game is played, by the time it gets to the teachers or cops or whoever might hear about it, what they are hearing is something completely and totally different than from the reality, if you would. And so it's important, again, for you to hold on for a second, please. It's very important for you to make sure that you hold on to this domain. Please don't call me or text me asking me for the domain. I'm not going to give it to you. That's your job and your responsibility to do. And it's what you see right there. Now, this is very, very, very important because it is finally being settled. It's going to go away. And I think you should, again, if you qualify for it and you want to be part of the settlement, you can do that, but you better hurry up because one of the deadlines for excluding yourself already passed. And this is going to wrap up real quickly. And a lot of people, including myself, are just waiting for a payout. And it is what it is. So go through this right here. What is the lawsuit about? Click on it. It'll tell you. It relates to illustrations of what we call ICS or the LICS, Secure Plus Provider, policy, Paragon, and so on. And the way the guarantees are illustrated. And also, just so you know, a huge part of this, it's the way a lot of agents explained it or are currently explaining it, as if you would. And so again, this is an easy way, a very easy way to end up in the lawsuit. That's why it's so important to have your E&O paid up. My recommendation is just become well versed in it, and you won't have to worry about a thing. And so that's why I think it's important to, again, know that we are dealing with something very, very critical. I also want to let you guys know about something that I'm doing for 2022. And let me just pull it up so you understand what I'm talking about. It's not going to apply to most of you, so don't worry about it. Don't read into it. There's really nothing to read into, but I just want you to be aware of it because I am looking for 10 people, and I'll explain to you where those 10 people are coming in. Before I get into that, I just want to also let you know that I'm 100%, as you should be, 100% in 2022 mode. And I encourage you to go ahead and do the same by not leaving things to chance. Don't be one of these daydreamers. Don't be one of these, oh, I'm going to line up all of my goals for next year and keep them in my head type of thing. My recommendation is to leverage tools from people, companies, and platforms that I time tested and proven. And most of the things that I set out to do in 2021, regardless of the pandemic, have come true for me in every aspect of my life. Most of you know me. I do multiple things. I'm not a one-trick pony as it relates to just FFS. That's just not what I do. And I, decided to line up a few things new this year. One thing, to be more precise, and it's turned out to flourish really, really well. And it's just simply one more stream of income for me. And I'm going to do the same in 2022. And I'm looking for, again, 10 people. And I'll tell you how I came about of that number, 10 people, in just 1 second. Next Saturday, next week, we're going to talk about what you see here on the screen, which is the 5-minute marketing planner. What I like about this system and platform is that it gives you a checkup from the neck up, which is where most of us are going wrong at any given time. And so therefore, it's important that if you want to be part of this, I'm going to show you how to leverage the power of this right here. It's pretty cool. You can print it out, write it out by hand. You can go ahead and fill it out electronically with the laptop, if you would, or any kind of computer. Or if you have an iPad, you can actually just write onto it. It's fillable and it's compatible with the Apple Pencil, which is really, really good. I like to surround myself with people that know where the hell they're going, and I stay the hell away from people who have no clue where they're going, because all those people can ever do for you is get you lost, slow you down, or in either way, it's not a good thing. So the way I see it, I pull out the tools that I use that I'm telling you, if it's working for me, it will work for you. It provides you with everything you need. These are the three sides of it, if you would. There's three elements involved. One of them, which you're seeing right here, it's really, really cool. Everything that you see is part of the actual plan itself. There's the first one. The second one is the goal planner, which is what you see there as well, that allows you to track yourself on a daily, weekly, monthly, quarterly, and then annual basis. So you understand that you are serious about achieving what you want to achieve. If it lives in your head, you're wasting your time, giving yourself false hope. It's not going to work. And I'm telling you right now, it takes something like this to make sure that you're the type of person that leaves nothing to chance. I don't like to leave a thing to chance. And then the last package that comes with it is what you see here as well. And so here it is. And it's an actual daily planner, because where most people fail, they put out all their New Year resolutions out there. I want to lose weight. I need to make more money. I need to pay down my debt. And in 3, 4, 5, 6 days, it's over. It's a done deal. And the year ends up looking a hell of a lot like last year, which most people didn't like the way it turned out. And so therefore, you have to stay on top of it on a not just annual basis, quarterly basis, monthly, weekly, daily, and if you're hardcore, on an hourly basis, so you know exactly what you got going today. As you saw on that screen right there, to move any business forward. And so for me, people always ask me, how can you do so many things? And I go, no, I'm not doing many things. I'm doing one thing. It just so happens that here, I'll get into that in just 1 second. So I want to invite, if somebody here wants to join me, it's going to be this coming Tuesday at 7 p.m. Pacific Standard Time, which I'll give you the rundown right now. Anyways, I recommend you get this course. It's usually $97. It's $37 right now. If you get the add-on that I added, and I'm not an affiliate, by the way, I don't get a penny for this. I think the planner that I added was another 14, 18 bucks, something like that. So I spent a whopping 60 bucks to leave nothing to chance for next year. But if you are up to it, you can go to this website, wiseowlmarketing.com, and then click on the 5-minute marketing planner. And the reason it's 5 minutes, just so you know, they market it as 5 minutes, which I think is genius, is because if they called it the 60-minute planner, nobody would do it, even though it's going to take you 60 minutes. Just by calling it 5 minutes, well, yeah, I can do that to make my dreams come true. I can afford 5 minutes. But if you're interested, I'm going to be training on this next Saturday, and I'm going to be giving the planner away for free. So if you want to do that, set that on your calendar so you can go ahead and do that. I don't know how many people have got this program already. I told you about the importance of having a story. If you want to sell more, you better sell with the story. If you want to recruit more, recruit with the story. And ideally, let it be your story to be able to do that. But I just wanted to do somebody that the training could have come at a better time. We're having issues, and the industry continues to have issues with people not sometimes knowing what it is that they're doing. And that, in my opinion, has a lot to do with lack of quality training. And so to fix that, we have Mr. George Munoz, who I've known for many, many years, who is probably one of our top personal producers, has the best team as it relates to some of the top earners that are active in the business, whether it be Knock or whether it be Daniela. And I mean, just an outstanding person that I would thank him for his time to share with you training to help you understand the illustrations, how to explain and what everything means. So if you have any questions, don't call me, call George. Or better yet, unmute yourself so everybody else can hear what it is you have to ask, and then they can learn and partake in your questions as well. So George, are you on, George?
Yeah, no, I'm on. Can you see me?
Perfect. I'm gonna mute my video and everything so I don't bug you, but go ahead. It's all yours, sir.
Okay, I should read that. All right. Good morning, everyone. Yeah, I promise I won't keep you more than necessary, but so after last week, and of course after talking to Javier this week, I thought this was very, very important in regards to the lawsuit. I've been getting phone calls left and right from clients. Matter of fact, one was a little topical because she was panicked about surrender charges. What is the surrender fee? And it turned out to be a client that had already had a plan for 11 years. So I told her that you have zero surrender fees. So luckily, I was able to pull her up, show her, and now it looks like she's going to be upgrading her plan from what she had, because again, the name provider has kind of been mentioned all over that lawsuit, and she's going to be upgrading herself up to a flex life plan. So that ended up being a real win-win. More benefits, more everything else. But what I wanted to cover today was obviously surrender charges. Again, what Javier talked about with that lawsuit. Surrender primarily it has nothing to do with the product, has nothing to do with the company, but more with agents in the field that just plain and simple just failed to explain how the plan worked, or maybe just misrepresented what they were actually selling to the client as well. So what I'm going to do, I'm going to take you through an illustration on that, and how you want to explain it. Because one of the key things when you do sell a policy and you deliver it is you explain the illustration. I spend a lot of time with that. I will go through it. I will go through the numbers and try to explain as much as possible. Depending on that, and not to toot my own horn, I don't get a lot of chargebacks on a personal level. A lot of my business stays on the book. For example, that client that called me, she's already been on the books for 11 years on it. And now essentially we're going to restart her all over again into another plan, which is just going to be a win-win because she's just going to get more benefit out of it, especially with the newer plans as well. So I got a question. I want to make this as interactive. Probably hopefully they can unmute themselves briefly, but I want to at least get the concept here. What is the purpose of a policy delivery? Anybody answer it all?
Anybody can unmute themselves, just so you know, at any time. So just hit the unmute button.
All right, just unmute yourself. Come on, guys. I know you. I know at least half of you on this call have delivered a policy in the past. But what's the main purpose of a policy delivered besides the legal portion that you have to deliver a policy?
To resell the product.
Thank you. Thank you. That is the whole key. And that's the way you got to look at it. Again, it is something that's a requirement, to actually put the policy in force and the client to take possession of it. But what you should be doing, you should be reselling the plan of why the client got that in the first place. And unfortunately, I mean, to my shock, even when I run into clients that have old policies with other companies, I always ask them a question: Did the agent explain this portion to you? No. Did the agent explain to you the free look period? No. Literally, what's happening, and I've seen this in the past. Agents will just come in, they'll bring the paperwork, sign here, sign there, and have a good day, and then just walk away. Ergo, that's why we're having the problems that we are with this lawsuit. So I'm going to share my screen. And again, if you guys have any questions while I'm going through this, by all means, just unmute yourself. Just let us know. So let me go ahead and share my screen. It's got queued up here. Give me a second. Screen. All right. You guys see my screen right here?
Yes.
Everybody answer at once. All right. So here, this is just a generic illustration. It's actually for like a kid's policy. Because I was using it in a past training, but I thought it was appropriate because it doesn't have the client's name on it, on there. And I essentially just redid the illustration, kind of showed it a little bit. So this is typical what a client's going to receive once everything is approved, everything's good to go, and they're ready to review it. And nowadays, what's great about it is you can do all these reviews from the comfort of your own home. You could do it online on a Zoom call and have at it. What you don't want to do is sign off on the email and then just have it go to the client. Just tell the client, yeah, just go ahead and just DocuSign and we're good to go, which is true. But at the same time, you're going to be doing a big disservice to the client if you don't go through it. So obviously this is the cover page right here. Okay. This talks about how much money they're actually putting into the plan as well. They're putting $800 a month in there. This is their death benefit that they're going to get. And obviously right here, live too long. Again, keep in mind, this is a child. By the time they start taking cash, or if they need cash, by 69, they have 5.8 million on their 79, all the way 84. That they just let it keep growing. It's over 14 million. So this in itself will sell them just from the money aspects. And then down here, of course, we got the terminal illness benefit, which is maxed out across the board. So I'll cover that with them and, just really highlight it. They do a good job with the illustration showing as far as what the benefits are, the tax-free death benefits, the income, with the lifetime income benefit rider and the benefits rider. Down here, a lot of people will ignore this or just gloss over it, but this really just shows, what they do. So let me do a little drawing here so you guys understand, what we're talking about here. Okay. So literally right here, they just do everything there based on graphs. In this example, it shows how much premium a person has put in, and by the time they are age 69, this green graph is how much cash they're going to receive. And of course, here's the good old death benefit that's going to come out of it. Now, if you guys are not sharing this with your client, because again, you have to read, most people are visual, and this is a great visual tool to say, okay, I'm putting my money in a good place because I'm literally just going to get, just 10, 20, maybe even 40 times return on the money by putting in this product. So again, we're reselling, what they're actually doing. Here we'll explain the caps, which I won't go in great detail, but as you guys well know, yours should be doing, everything should be going into the credit suites. It just has the best 10-year average of all the strategies. But again, I'll also explain that if anything ever changes, that's the main reason you want to keep doing your annual reviews, because that would be the time for you to make any allocation changes to any one of the strategies right now. So we'll go over that. This page talks about how much cash they're going to have, the death benefit, and all the riders on there. and then we'll go right into the important thing, the ABRs. And yeah, real quick, me and my team have been talking a lot about long-term care right now in the state, in heck, in this country right now, and the growing need for it. And guys, we should be focusing a lot on these ADRs. I mean, again, you can't call it long-term care, but when you look at the way long-term care works, where if either you use it or you lose it, to be able to present an alternative such as an ABR that can be used, but if you don't use the ABR, there's still a death benefit, there's still cash in there. That to me is a bit win-win, and we're gonna be focusing on other solutions as well. That maybe another time I'll talk to Javier about. Uh, at another time, as far as some of the things that are on the horizon with long-term care. So if you guys are curious about long-term care and look at the stats and look at the what the need is going to be, that's going to be a huge market in the coming years, especially as the majority of our population is aging out of the workforce, especially. All right, so now this is the main thing. Let's go to the illustration. All right. And what I'm going to focus on, and this is something that most agents do not, is the guaranteed illustration. All right. Now, again, this. If you look at it on paper, if you do not explain this portion to a client, essentially you are just opening up a door for another agent to come along, whether it's WFG, Primerica, or whatnot, to essentially swing your client the other way. I had this happen to me before, way back. I'm talking probably 15 years ago when I was barely starting the business. Sold a policy to a teacher, his wife, 2 kids. Great, I was happy as can be. And literally about maybe just under a year later, I get a notification the client's surrendering the policy. And then I don't know why. I kept trying to reach out to the client. Wouldn't return my calls. Basically they were ghosting back that day. Luckily, I ran into the same client at the same school when we did another presentation there. And, again, it was a very friendly conversation. I go, look, I was trying to get a hold of you. I got notified that you gave up your policy, just for my benefit. What compelled you to do that? Why would you give up something that gives you ABRs, gives you cash value, gives you protection for your family? Why would you ever give up something like that? And bottom line, he said, well, we took it to either a financial planner or an accountant, I don't even remember, and he went right to the guaranteed illustration page, and he said, look, according to this, you're guaranteed to receive 0. You're guaranteed to receive nothing at the end of the day. Everything basically based on the guaranteed illustrated value. Because I didn't explain it, from lack of experience, I'll chalk it up to that. Another person turned around and convinced the client, and so you've been ripped off. They're basically, at the end of the day, once you stop paying premiums to this thing's going to collapse a couple of years afterwards. Now, luckily, happy ending to the story. I had more experience under my belt, and I was going to tell them, no, that's not how it works. It's not. You should really take a look at it. And believe it or not, Daniela, I passed them over to Daniela. Daniela went ahead and rewrote the entire family once again, got them into new policies. And to make it even a happier ending, he eventually ended up joining FFS. And again, to echo what Javier was talking about, just gives referrals on it, got his license, and he'll bring in business once in a while for Daniela as well on that. But how do you explain a guaranteed illustrated value? Because if you look at this illustration, okay, most agents in the industry are afraid to even touch it. They just plain and simple don't want to go there, because if you look at what it shows, okay, number one, you got your surrender value, which we talked about. That's the basis for the lawsuit that happened. That nobody ever explained to them that they're not going to get their cash in the first few years on there. And obviously they did a disservice because they don't explain that, hey, the surrender values or surrender charges are a good thing, because that's usually going to guarantee the higher interest rates. But more importantly, that's really where the company's going to collect their profit. Because if you guys have been in this industry long enough, what happens at the end of 10 years? I'm going to pick on somebody. Bob, we need your wisdom on there. What happens in an IUL after 10 years in regards to surrender fees?
The biggest charge comes off.
Okay.
They in the first 10 years, there's the cost for insurance, there's the administrative fee, and then there's this expense fee, and the expense fee is the profit for the company. So the company gets all of its profit in the first 10 years of the policy. After that, they don't charge any more for profit. They just charge for the cost of insurance and the administrative fee. And
Absolutely.
so it's a win-win after if you can get past the first 10 years. And the reason why the companies do that is, one, they want their money up front as fast as they can, and also probably because they figure that after 10 years, 12 years, whatever, the person's going to cancel the policy, so let's get all our profit up front.
Yeah. Okay. Perfect. And essentially, that's what it is. If you think about it, just by looking at this illustration, you're putting in $9,600 a year in premium, but in return, you're getting right up front. You're essentially getting $540,000 upfront in protection. So there has to be an exchange. So it's got to be an equitable change in this case as well. The clients are going to be receiving that as well. So the company has to secure that. But the good thing is, once they get past that 10th year, like Bob said, a lot of expenses fall off. Some bonuses would kick in, especially in the provider plan that they used to have as well. And what I always tell my clients, this is when you get past the 10th year, this is really when your plan is going to take off. And you can see by the illustration, well, you can't see it on this one, it's a guaranteed illustration. We'll cover that in just a little bit. That's essentially where now the plan has gotten enough legs underneath it, or motor, so to speak, that it really just starts revving up. It just goes into another gear as far as how it's making money. But getting back to the guaranteed illustration, let's ask the question: why do you think most agents don't even cover this? Anybody at all, chime in. What do you think is the main reason they just shy away from it, or just don't mention it at all?
And look, if you look at the top of the screen, it tells you right there that this calculation is based on only a 2% return. So they're giving ridiculously low rate of return there, hoping that it's just way too low. They never pay that.
Yeah, they know that's dead on, and I'm gonna get to how to explain it as well. But every company, the way I explain to every client, every company has to show their absolute worst case scenario. It doesn't matter whether it's National Life, Farmers, Pacific Life. If they have a fixed plan or a fixed index plan at all that they're trying to put there, they have to show what they guarantee. And in this particular case, they guarantee 2% on that. But there's a lot more that goes into it in there. So, for instance, one of the things I always explain to clients, that there's two main factors that have to occur for a policy or an illustration like this to ever become a reality. So, who could tell me the two main factors that have to occur that would make this guaranteed illustration real? There's two main factors that the company will essentially calculate into this to make this a reality. And anybody else but Bob, okay? And I preached this before, so anybody on my team should know this. But what are the two main factors that would make this illustration, this calculation real? Getting crickets. Okay. All right. Don't make me pick on somebody, because I will pick on somebody. Andrea, how about you? What are the two main factors that come into play for the guarantee illustration? So I'll pick on you, Andrea.
So the first factor, I believe, it's not sticking in my head right now, but the market would have to be down for at least 10 straight years.
Okay. Well, you're close. Okay. It's actually more extreme than that. The market would have to be zero or negative for the entire life of the plan.
Okay.
So think about it this way. Can you imagine the market being zero or negative for 15, 20 straight years, 25 years? More likely, if that were to happen, we'd be flying a different flag in this country, because we're talking about total economic collapse that would have to happen to our system. That's one factor. So what's the second factor that would have to come into play that's calculated into this? Bob,
The other thing, by the way, is like they're showing you a 2% return, but uh, they're also using the guaranteed highest amount of money that they can charge for the cost of insurance, which they never do. They never use that number. That number has never ever been used. So you're talking, like you said, the worst case scenario is that the market doesn't do a single dime. It loses money every year for the next 25 years, which is never going to happen. And the most you're going to get is a 2% return because, the market didn't do anything. And we're going to charge you the most we can charge you for the cost of insurance. So this is like the, impossibility. It could never happen.
Yeah. No,
Never
I
happened.
like to equate it to, uh, for you would probably have a better chance of hitting the lotto than having this happen. It's like Bob said, yeah, the market, or Andrea said, the market would have to be down. Okay, that's factor number one. So basically, down either 0% or less the entire life plan, and the other one is, essentially cost of insurance, which is based on what? Mortality.
Yeah, and they allow them to, I mean, that if you look in the policy, it says, okay, here's what we're going to charge per thousand of, coverage. But if like all of a sudden if all the 30-year-olds in California start dropping off like flies, we're going to go to the state and we're going to say to the state, look, we're losing money on these 30-year-olds. We got to raise it. And then they're allowed to raise it up to the max number that's in the contract. So that's never ever happened that I know of, and I'm sure Javier could say the same thing. I'm in the business 36 years. It's never happened in 36 years. Okay, and it's not going to happen. But they're using that number for these illustrations. For these guaranteed illustrations. That's never going to happen.
Yeah. Yeah. Literally, people would have to start dying off in their mid 50s as opposed to their mid 70s and low 80s as they are today. Now, we have seen a population decline and longevity decline in this country. So I'm sure that the cost of insurance is probably going to just tick up just a little bit on it, but it's never going to go to the extreme of the maximum level. That literally would mean that we got something a lot worse than what we're having going on in the pandemic on that. So that's perfect, Bob. Perfect. Thank you for sharing with that. So bottom line, if you explain this, just explain it like this. There's two things that need to happen. The market would have to be zero or down the entire life of this plan, and the cost of insurance would have to be raised to the maximum allowable level, meaning that you have people dying at a very, very, extremely, very young age in order to trigger that effect. The reality is, you do have a better chance of hitting the lotto than this ever having to occur. So after I explain that portion, they get it. They get the whole concept on that. I'll go right down to the current illustrated here. I'm going to do some erasing here for you guys.
George, you could hit that little plus button up in the top there and make that a little bit bigger so people can see it better.
Okay, I'll do that right now.
See a little plus button next to the 100.
How about if I just do that? How's that?
Yeah, perfect.
All right. So this really is what you guys should be focusing on, or at least getting the client's eyes on, is here, which is the guaranteed illustration, because this is actually based on 10 years, historical numbers. Now, again, even better still, although many people in the industry wouldn't agree, the weighted average is actually very conservative because of new regulations on there. So now, the interest rate that they charge for loans and the interest rate that they actually receive are literally 1% apart altogether. So when they start taking income, it makes the calculations very, very conservative. And if you go back and look at the history of the S&P, the Credit Suisse, more than likely they're going to make more money on that. But again, what's that old saying? Under promise, over deliver. That's essentially what that regulation is putting us in a position to do. Now, again, this is a young one, 3-year-old that I pulled up. But let's do one more with somebody that's maybe a little bit older. So let me go ahead and close this out. All right. Now we're gonna.
Hey, George, can you hear me?
Yeah, go ahead.
Hey, this is Alan. To your point on the low interest rate on this guarantee illustrations, the way that I explain it to my clients, it's actually I put it as I present it as a positive. I said, listen, even if the market is down for all these years, the company is guaranteeing you, even though the market is down, that you're still going to get paid money. You're going to make money, even though the market is down. No other financial product can do that. And even in the worst case scenario, the company is putting in writing that they're still going to pay you interest rate on your money. That's a huge plus because no other financial vehicle is going to pay them interest if the market is down.
Yeah. Yep. You're absolutely right. That's
Just so you know, the system's going to knock you out right at the top of the hour, just so you know.
Oh, shoot. It's already 3 minutes still. All right, real quick, and then we're going to wrap it up. But I want to show you guys as far as I just changed the date now to I picked a 40-year-old on there. And I'm going to go straight to the guaranteed illustration, because it's probably not going to be as impactful for a 3-year-old, because obviously the policy is going to last a little longer. But if you look at the same scenario, same amount of there, now we just changed the age, so now we're looking at a 45-year-old. Then the guaranteed illustration shows them running out of money right around age 91. It starts lapsing on there. And again, this is essentially what legally they have to show, but in essence, it's fiction. So that's all I got, guys. I'm out of time now. If you guys have any questions on this, feel free to reach out to me or reach out to Javier, and he'll get a hold of me as well. If you guys need any help with that at all. All right, Javier, back to you.
Thank you, sir. Well, thank you very much. One of the things that I will emphasize is how important it is and how fortunate we are to have this type of training where I just wish more people would chime in. Thank you, Bob. Thank you, Alan. But I think that this is something that everybody should be chiming in with questions so that we have a better understanding of what it is we're supposed to be doing and to do it the right way. I've been here for a very long time. Bob has been here for a very long time as well. And I will tell you that one of the bonuses that people miss out on when it comes to this industry are the renewals and the fact that people in the business is staying on the books, and that gives you the ability to retire someday, passive income, everything I described earlier. But it's no good if people are canceling their policies on you because of misinformation from either A, another company, or B, because you just failed to properly explain to them to the point that no matter what happens, they and their families are taken care of. And I think that you have to, like George said, under promise, over deliver. And the over delivering part is simple. Value that's built into these plans will sell itself as long as we do our parts as well. Like George, first of all, thank you so much for your time and your knowledge. We are going to have other guest speakers or guest trainers with a lot more time giving them to us. So I apologize for the taking up so much time in the beginning. I didn't realize how much time I took up, George, but I just want to thank you for your time. I know you're busy. And for everybody else, I really just challenge you to go out there and make this coming week the best week in the history of your FFS business. Check your emails. There is a new update on the positions or the standings for the Dream Destination Cruise to Europe next April. And I'm happy to report some of our teammates are moving up in the ranks. Others are on the bubble. So let's go out there and leave nothing to chance. All right. Thank you so much, everybody. Have a wonderful week. Stay safe. And more than anything, stay healthy. Thank you.